The BCG matrix, Boston Consulting Group matrix, is a strategic tool used to evaluate a company's portfolio of products or business units based on market growth rate and relative market share. It helps businesses prioritize investments, allocate resources effectively, and develop long-term strategies. Structure of the BCG matrix. The BCG matrix divides products or business units into 4 categories based on their position in the market. Stars. Description: high market growth rate and high relative market share. Strategy: invest heavily to maintain leadership and capture growth opportunities. Example: Apple's iPhone during its peak innovation phase was a star due to its dominance and rapidly growing smartphone market. Cash cows. Description: low market growth rate but high relative market share. Strategy: harvest profits and reinvest in other areas of the business. Example: Coca-Cola's classic beverage line is a cash cow, generating steady revenue in a mature market. Question marks, or problem children. Description: high market growth rate but low relative market share. Strategy: analyze if additional investment can increase market share or divest if growth is unlikely. Example: Tesla's solar panel division could be considered a question mark due to its position in a fast-growing market with significant competition. Dogs. Description: low market growth rate and low relative market share. Strategy: divest or maintain only if strategically necessary. Example: a legacy product like Microsoft's Zune, which failed to compete in the stagnant MP3 player market, was a dog. Steps to use the BCG matrix. Identify products or business units. List all products or business units in the portfolio. Analyze market growth rate. Calculate the growth rate of the relevant market segment. Determine relative market share. Compare the product's market share to the largest competitor. Place in the matrix. Position each product or unit in one of the 4 quadrants. Develop strategies. Create strategies based on the quadrant placement: invest, maintain, harvest, or divest. Practical example: Google's product portfolio. Stars: YouTube. Analysis: high market growth. Online video streaming continues to grow rapidly. High relative market share. YouTube dominates the market. Strategy: invest in features like shorts and premium subscriptions to maintain growth. Cash cows. Google search. Analysis: low market growth. The search engine market is mature. High relative market share. Google holds the dominant position in search. Strategy: use profits from search to fund innovations in other areas like AI and cloud computing. Question marks: Google Pixel smartphones. Analysis: high market growth. The smartphone market is still evolving, especially with 5G. Low relative market share. Google Pixel struggles against giants like Apple and Samsung. Strategy: assess whether additional investment can improve market share or reconsider focus. Dogs. Google Glass. Analysis: low market growth. The consumer AR device market is niche and stagnant. Low relative market share. Google Glass failed to capture significant adoption. Strategy: divest and focus on other AR or VR initiatives in enterprise markets. Advantages of the BCG matrix. Simplicity. Easy to understand and implement for strategic decision-making. Resource allocation. Helps prioritize investments across the portfolio. Strategic focus. Aligns organizational focus with market potential. Limitations of the BCG matrix. Static nature. Does not account for market dynamics over time. Oversimplification. Ignores other factors like profitability, competition, and brand strength. Market growth assumption. Relies heavily on market growth rate as a determinant of success, which may not always be accurate. The BCG matrix is a powerful tool for evaluating and managing a business portfolio. By categorizing products or business units into stars, cash cows, question marks, and dogs, companies can allocate resources strategically and focus on long-term growth. However, it is most effective when combined with other analytical frameworks to address its limitations and provide a more comprehensive strategic overview.